Got some Forex trading to do today. It's Thursday, January 21st, 2016. It's a Thursday, but it's an unusual Thursday. First of all, to start the day, we're going to have the ECB interest rate decision. And then a little bit down the road, I believe there's a press conference. And then also later today, we have oil inventories. Now, oil inventories usually is a Wednesday event, but in the United States of America, it was a holiday on Monday, so it's been pushed from Wednesday to Thursday. Now, do you think anybody cares about oil and oil inventories these days? Yup. So this is going to be an interesting day. Good opportunity to make some money. Pretty good opportunity to lose some money too. So let's play it on the right side of the game, huh? Let's get this party started. Good morning, by the way. If you have any particular currency pairs you want me to cover today, go ahead and just type it in the chat room. Let me know how Uncle Wayne can help. So welcome to Forex.Today. Hey, how do you get to Forex.Today? Do you know the way to Forex.Today? Yeah, you type in Forex.Today on your browser search engine, whatever you want. Hey, let me remind you that trading Forex is risky, not appropriate for everyone. You can lose money. You can lose all your money. It's pretty easy. Your past performance, however, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that gives Forex traders access to the interbanking system quick and cheap without drama. Don't be a drama llama. But there's also access to all other kinds of markets. So, for example, I want to cover stock indices from all around the world today, if you don't mind. And then every Friday I'm at fxstreet.com. You can catch me over there. I think all you have to do is pull up one of my webinar pages and just click like follow. And they'll give you an update and the login link and all that kind of stuff. Nice, easy little reminders. Wink, wink, nudge, nudge. So this is Forex.Today. Hope you like our little site. We have wonderful analysis that's being posted every single day, whether it's currencies of all sorts, but also gold now. Also, these webinars are archived on this site. Yep. So come on by. The cost to have an entire team of like 6 analysts stationed around the world watching the markets on your behalf and then documenting trade ideas, the cost for this service is free. All we ask for is your loyalty. In fact, we're trying to earn your loyalty. So without further ado, let's get ready for the ECB announcement in just about 6.5 minutes. And then we got some trading to do, and then I believe we got the press conference. I think there's a press conference on this one, right? Anybody confirm that? Yep, I think so. So I'll be around for that. Let's trade it as a team, huh? Sound good? What do you stink? Smell like a plan? Let's play the happy music. Forex.Today. So, g'day, mate. Shall I throw a pip on the barbie for you? Ripper. So, here we are. I have pound going on. It will be a few minutes until we get the ECB stuff. So British pound has been a good friend of mine. I've renamed my children. Pound, dollar, shut your mouth and don't touch that. Pound, dollar, go clean your rooms. So anyways, yeah, pound is nice and weak. That's pretty good. Remember, the big psych level was 150. Well, you know, we're clearly on the way there. We're on our way to 140. It's been payday on that one. Very quickly, you can see I'm not even looking at pound dollar. Even CAD and Aussie have broken out. Even CAD and Aussie. So if you remember not long ago, I can't remember, a few days ago, we talked about how to trade this. And we trapped it, right? In here. Boop, boop, boop. How do you trade a breakout?
Just under 5 minutes for the ECB rate decision.
Breakout, pull back, gone.
Keep their policy steady after they moves in
That's it.
December.
Breakout, pull back, gone.
A large majority, there were 5 dissenters in the cutting of the discount rate and extending the QE to 2017.
So anyways, I think that's awesome. It's been payday, so we'll come back to that. Obviously, we got some Euro due today.
Yeah, we get Polish December.
Do you remember what they did last year?
Retail sales and industrial production.
Not last year, sorry, I can't do two things at once.
40 minutes past to go an hour.
So they changed the discount window, fine, well, the discount rate, whatever. So what the ECB did last meeting was extend how long they're doing quantitative easing, and that was a real disappointment. That was like a big wah, 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 right? So what we want out of the ECB today is more monthly quantitative easing. More money, not just the same amount of money for longer. Because, you know, it's funny, the Fed tried things like that. If you remember, QE1 worked. QE2 did not work. Do you guys remember that? It was just underwhelming. QE3 did work because it was huge. Okay? So anyways, a negative deposit rate and, you know, longer QE. All right, those are okay, but it's not big enough. You know what I mean? It needs more. So we'll see how it goes today. What I'd like to see, again, is an increase in the amount per month that the ECB is buying in assets, right? I want to see their balance sheet increase. I do think the negative deposit rate's a pretty cool idea, and the Fed was too scared to do it because it was too radical of an idea, you know, 6 years ago. QE was a radical idea 6 years ago. Only the Japanese had really done it before, and of course it didn't even work. And we just thought, well, we can't do too many things at once because we won't know what's working and what's not working. So anyways, having a negative deposit rate was just too crazy. There were some other things going on too. You know, so anyways, we have very stable banks because we actually pay a deposit. See, the Fed pays an interest rate on a deposit. The ECB charges an interest rate on a deposit. Big difference, eh, Brew? So again, a bigger monthly number, I think, is what the market wants to see. And if so, Euro USD will fall. If we don't get anything dramatic, like maybe just maybe nothing, right? Maybe nothing change, no change would be just the worst case scenario. But I think a lot of people have gotten out of the euro trade, so this time I think if nothing happens, I don't think the euro is going to get too ripper strong. I mean, don't quote me on that one. But I think there are less people front running. So I think if no major change happens today, I think a lot of the people might just be on the sideline waiting, right? And then if there is a nice change where they do add more quantitative easing, the ECB gets in the game kind of thing, or even understands the game, then cool. Then I think a lot of people will want to get short again versus already short. All right. So these snapbacks we've had in the past, it's when the market's already short in anticipation of something dramatic, and then no drama, mama. Problem city, right? So anyways, we're using TradeTheNews.com for the live squawk.
And we're just under 30 seconds for the ECB rate decision. Again, sometimes
Can you hear him
a
talking?
few moments delayed. The consensus is for all key rates to be unchanged. We'll lead off with the main refi rate, expected to be held steady at 0.05%. We're about 10 seconds away in the window for the ECB rate decision. Still awaiting the decision. Unchanged across the board there. No surprises out of the ECB as expected, keeping all three rates unchanged.
Okay. Pretty amazing, right? You think pretty amazing? How do you feel about it emotionally?
The euro just a touch higher post data, holding just above the 109 handle, 109.13, about 0.2% firmer post data.
So it's funny, I'm looking at 3 different trading platforms and
Little reaction in the bunds. They're currently down just
they're
over
all
a basis
frozen.
points, still under the 0.47%. We did see the Schatz just briefly hit a day low, just under 111.64 following the decision.
wonder if it's my PC. Yeah, it's weird. But why only my trading platforms? Let's see. Huh. But I even have from other brokers because I'd like to see differences in spreads and stuff. So it's not just Trader's Way. It's something else is frozen up. Uh-oh. It's probably a browser issue. All right. Yeah, Hans says buy some new hardware. It is new hardware. Yeah, Flash is probably, yeah, it's one of these weird things. Well, it only happens when I'm running these webinars, broadcasting, and so it's something to do with that. But I don't know why it would be more than, so anyways, let's give it a stir. Let me stir the honeypot here. No, it's that Adobe Air again. I've updated it, so it's just weird. It just doesn't work. Yeah. Yeah, well, 26 pips isn't amazing, right? God, there it is. All right. All right, so up, down, turn around, up to the daily central pivot point and down. Pretty boring. Okay, I want to go out to the long term. and we'll look at some of these longer term charts. Do you guys remember on Tuesday I spent the whole day talking about how to use 4-hour charts? How many people remember that? Yo, by the way, yes, Gino says it's all up to the press conference. It's always about the press conference. Yeah. All right, so I haven't really actually been trading the Euro USD much lately. I think it's not the best trade to be done. So let's go to another view. There's a couple of things I want to cover here. Okay, one of them is the 4-hour pound dollar. And we had a nice move on that one today. And you're going to say, Wayne, it didn't touch the 21, right? Is that it? You're going to say, Wayne, it didn't touch the 21. What do you think's going to happen tomorrow? Oh, you lost the screen? All right, hang on. Did that work? Okay. So now you're saying, Wayne, it didn't hit the 21, so I missed it, right? That's the excuse, right? But what do you think's going to happen tomorrow? Tomorrow, that 21 will be touching the top of these candles. Tomorrow, the 21 EMA will be here. This is why you probably missed this one. Okay? Now remember, I set this one up for you guys, and then I set this one up for you guys, so on and so forth. And it's because the moving averages are lagging. We only get an update every 4 hours. This is a 4-hour chart. And this is where we talk about, if you're hunting deer and the deer is running, you have to shoot in front of the deer, not at the deer. Right. So Gino says, last time I said you have to guesstimate where it'll be in the future, right? And that's exactly it. And sometimes it's cutting corners like, doing this. Okay. This 55 on the hour is the 21 on the 4-hour-ish, kind of. Okay. But you should be ready in these areas. I mean, it should be your whole trade plan is, let's do it this way. This is what I do every day for you guys, right? I take the old low and I drag it across, right? 21 at that time was pretty high. You may have also had it fibbed, right? So generally speaking, no matter what it actually touched, the general idea, if I go to the 50% and I use the roll reversal, right, what we talked about on Tuesday was setting up trade plans like that over and over and over again. Is that correct? Trading in the direction of the prevailing trend. That was the whole hour and a half on Tuesday, wasn't it? I don't think we even looked at a smaller time frame. Okay. And remember, I think we talked about this going down to 136. We talked about it being a 2,500 pip move, and that there was still 600 pips left or something like that. So whatever you recall is actually the reality, right? So if that's what you recall, then good. If you don't recall it, then it doesn't matter. So I'm just saying that's pretty typical price action. You can apply it to anything. But in particular, this is a good trend. This is a good trend. Right? Gino says, how do you use multi-time frame analysis? How do you know if the role reversal's on the four? No, well, how do you know if it's on the 4 hour, 1 hour, 5? It's on all of them, Gino. That's what fractal geometry is. This chart is price and time. This chart is price and time, and they're both correct. Okay? What I like to do is say, I want to sell in this zone, the lower low, lower high, roll reversal. This is 4 hours. This is what on Monday I defined as the market. This is the market trend. The market is bearish. I want to sell. I want to sell high. I want to sell high at resistance. Where's resistance? And I mark up the roll reversal area. I use a fib. I look at psych levels like 142. 142.50. I use pivot points, all kinds of things. And sometimes it doesn't really matter, right? So you get your retracement, and we know all in here is the trade plan, somewhere in here. So you wait for 12 hours or 16 hours, and it gets into that area, drop into a smaller time frame. Okay. When you're up in here on the hourly and you're touching the 3A2, drop into a smaller time frame. Okay. There's lots of ways to trade it. A really conservative way to trade it is to, set it up, let's say, like a range. Trade the breakout here. Another way is to say it touched, okay, you see how it touched the 3A2? Did it take a while to drop, or did it drop immediately off the 3A2? Gino says, but many times it doesn't go back to the roll reversal. Well, then don't trade it. So what we want from you, Gino, is control. Okay? And from control, you'll get consistency because you'll be trading the same types of trades over and over and over again. Like, let's say, this type of setup. And you're ignoring everything else. Like, when it doesn't pull back, you don't trade it. Fine. So now you have very consistent trades, right? The same type of trade over and over and over again. But with the success that brings, you'll gain confidence. And you'll be a confident trader that's profitable most of the time because you're taking the same type of trades over and over again. Obviously, you're going to get pretty good at spotting those. Obviously, over time, you're going to get really good at managing the risk and recognizing when the move is going to end because you're going to be an expert in that one move, that one type of move, right? Control brings consistency. Consistency brings confidence. Okay? And now, 5 or 6 years later, you might have 5 things that you're an expert at. 5 trade patterns that you're an expert at. Right? Maybe one's a swing setup, one's a spot setup, you got a couple of scalp type things you like to do, maybe a counter trend trade you like to do. But now you take those specific types of trades at specific times and places for specific reasons, right? You're still very consistent with those setups, knowing that 75% of the time you make money. And when you make money, your winners are a lot bigger than your losers. So that's why you're confident, because it's your job, right? You know you're going to make money. And that's what I want you to get good at. Okay? So if you say things like, well, what if it doesn't pull back? Well, then you don't trade it. There's your consistency. You only trade it if it pulls back to your roll reversal area, then you get ready, and then you trade it under your terms, right? So I think that you should be short sort of in here or down here. Okay? Yes, right. So yes, well, going back to the high time frame, does this put me into a trade, this chart? Do I say, oh, look at that, I'm going to pull the trigger on a 4-hour chart? Waiting for a 5-8 cross on the 4 hours is a little slow too, right? It could take 16 hours to get a 5-8 cross, right? So this is just to identify trend. Is this bullish, guys? Right? Is it sideways? Or is it bearish? Okay. So now let me zoom in a little bit. That means I only want to sell, right? I mean, that'll decide what I do for the entire day. I just decided what to do over the next 24 hours. Do you understand how profound that is? Seems easy, but it could keep me out of a stupid trade. Okay? Fine. So now that I'm a bear and I've decided I want to sell, do I want to sell at support or do I want to sell at resistance? Do I want to sell low or do I want to sell high? Okay? Good. Identify the area in which you want to consider selling. Okay? And that would be, for me, if I'm using a fib, somewhere between the 382 and 618. Then I look at moving averages, I look at pivot points, I look at psych levels. Okay? Turns out all we did was come back to 142,000. Nice psychological level, and then it fell. Now we're at 141. Nothing complicated, right? Now, there's still no trigger here, but we know the area in which we might be interested in pulling the trigger, right? So this chart, I could look at it for an entire, 1 second and say, oh, right? Smaller time frame. Okay? London Boys sold it, by the way. And that's that. Okay? It's just a setup. Nothing spectacular. That's just how you trade. So I wanted to show you a couple of things. Yesterday, the yen got very strong, right? I was short Aussie yen and CAD yen and Kiwi yen. And then, and all the commodities were weak, right? And then something changed. Right? Did you see that? Right in the middle of the afternoon, all of a sudden, everything dramatically reversed. And not by like 25 or 30 pips, by like 150 pips. I think we can consider that, a reasonable, move, right? So WTF? What was that all about? Let me show you something. Bum, 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 bum. Loading. Loading. Okay, well, let me start with the Nikkei. Let me zoom in. Look at this. Yesterday afternoon, we hit this and went boom, 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 boom. Straight up. For 4 hours, it just went straight up. Now remember, I talked about when the Nikkei is falling, and we talked about it, I think, just yesterday. When the Nikkei is moving down, the Japanese yen is strong, correct? So short a yen pair. It's a risk-off moment. So you're short CAD yen, Aussie yen, Kiwi yen, that kind of thing, right? And I showed you Kiwi yen? Okay. And then look at this, guys. Pachow for 4 hours straight. Huge move. 4 hours straight of up, 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 up. Holy smokes, eh? That's just less liquid, Jimmy. Okay, it's not a future. So anyways. So there's that. How about the Great British Pound? This is the FTSE, the Financial Times Stock Exchange Index, the UK 100. Look at that, huh? Down and then straight up. Pachow! What's the common theme so far? The pivot points, guys. These are, okay, see the reversal pivot point? That was painted on Monday. That's where the stock market's supposed to reverse. Let me go back to the Nikkei now. That's the UK. Back to the Nikkei. That's where it's supposed to reverse. So, Japan, right? So Tokyo, London. How about the S&P 500? Wow, huh? Look at. What was that rate, eh? Very interesting stuff. Because it's actually supposed to do that, right? That's the usual. This breakthrough that you see in the top left corner, that's unusual. This is actually usual. And of course, notice people sold it off the 21 again. They did what they were supposed to do. So it's just to point out it's a very interesting thing. And the Japanese yen did respond and did react as one would expect. So, do you think stock market participants, do you think they use pivot points? Look at the euro yen. It's almost stupid, isn't it? You're like, is that the same chart? Is that the S&P 500? No. Is that the FTSE? No. What chart is that? Oh, that's euro yen. But it's exactly the same as the other charts. Uh-huh. Spooky. Another example, how about CAD yen? Right? Different pivot. It is a support pivot. But again, look how immediate it is. Pachow! Isn't that redonkulous? Right when those stock market indices were hitting bottoms, the yen pairs flipped on us. Okay. Nice, huh? Now, I want to point out one other thing about the S&P 500, if you don't mind, and then I think we should do some oil. I think I'll bring it up. I think I have it here. We actually talked about yesterday's low last year, late last year, probably November and December. Michael wants to know what's first, stock or Forex. And, you know, I've actually gotten into debates with people over that, and I think it's simple. And yet other people disagree with me, and they're not simple-minded people. So I believe I'm 100% right, but not everyone is certain. Right? So let me tell you. If currencies do not cross an international border, what happens to currency valuations? What do you think, guys? Nobody moves their money. Uh-oh, SpaghettiOs. Clicked on something I don't think I was supposed to. Stupid Adobe again. Yeah, so nothing happens because there's no change in supply or demand. Okay? If you don't buy the New Zealand stock market, you don't need New Zealand dollars. If you don't buy the Australian stock market, you don't need Australian dollars. Okay? But let's say you're in the Australian stock market and you decide, whoa, it's crashing. I want my money back and I'm bringing it home to America. What happens when you cash out of the ASX and move your money back to your home country? Let's say the United States. What happens? Here, I'm going to reset this. Hang on. Let's see if that helps. No, it didn't help at all. Something's really messing with my screens again. Well, it wasn't Skype. Can I kill this? There's something bogging everything down. Don't blame MT4 in this one. All right, let me fire it back up. If you see camouflage, that's okay. So continuing with the conversation, if money doesn't cross a border, nothing happens. if you're in the Australian stock market and it's crashing and you decide to cash out and bring your money home, if home is a foreign country, then what happens is you're selling Aussie dollars in the open market and trying to exchange it for your home currency. If that's US dollars, then you're out there exchanging your Aussie dollars. So you're adding Aussie dollars into the open market and you're exchanging them for US dollars. So you're taking US dollars out of the market. That means there's an increased supply of Aussie, a decreased supply in US dollars, and the laws of supply and demand would dictate that the Australian dollar would weaken because of the increased supply, and the US dollar will strengthen because of the decreased supply, but also the increase in demand that you created. All right, I think we'll be back in business here. Okay, so my argument has always been, which one's first? Well, it would have to be something other than the foreign exchange market. Does that make sense, everybody? So in this case, maybe it was equities, but it could be the bond market. See, the bond market is what, 100 times bigger than the equity market? So who cares about about equities? I was never interested in equities. I was a venture capitalist. Only a fool would pay retail price for a stock. You bought Apple at $200? You bought Apple at $400? Oh, what? Yeah, I bought it at $6. Yeah, and that was too much. Right? You want to be a venture capitalist that paid 20 cents for Facebook. Right? So anyways, so that's why I've never actually been interested in the stock market that much. I also think CEOs are incentivized to lie to you, or at the very least lie to themselves, and therefore you're never going to get real information. Let's go back to the news trade. So when the quarterly call comes out, you're not going to get, you're going to get some fabrication of the truth, whether it's an outright lie or just unbelievable self-interest or hope, right? So, okay, crude here. This is the one I want to get to. Thank you for your patience, everybody. Something wrong with your eyes. Boom, boom, boom. So don't let me forget about the conference. We're not far away now for the press conference to start. Are you going to stick around for the ECB press conference? If so, type in ECB. Let me know what you want to do. Is it golfing day? All right. So anyways, there's oil. Let's see. Did you sell it at the 21? But Wayne, that'd be too easy. Yeah, I know. Wouldn't be fair for the dumb people, right? Mark wants an outlook, but Mark, I'm here every day. Why do you need an outlook? We're here every day. I talk about it every day. Every day is an outlook. So nice, beautiful trend, right? Up, down, up, down, up, down, up, down. So I'd actually like to see a little move into here. Well, I'm all and I'm both, Mark. So I like long term. So hang on. Let me. I've had to shut down a bunch of browsers, so I don't have what I had running before. So 1 second, please, while I get ready for the ECB. You do want to listen to Mario Draghi speak, right? So let me get that for you. Let me wait for it. Okay, I'm almost there. We're only, what, 10 minutes away from the conference, from the press conference, so not far away. Something wrong with the world today. Don't know what it is. Something wrong with the eyes. Okay, I am going to create a post. I kind of miss Trichet and his press conferences. I don't know if you've been trading that long, but Trichet was great. He would yell at the men and he'd sweet talk all the women. You know, typical French guy. Yeah. Okay. About what, 7.5 minutes to go, and I'm almost ready. Like literally just 30 seconds longer, and we're good. Oh no, they changed their they changed their music at the ECB. You know, they must have had like a 5 hour meeting. They probably went through, 2 cases of wine and a whole carton of cigarettes, and then decided the new music. Well, I suppose that just shows they care. But if you'd like a link, it's here. Yeah, new music. You guys want to leave a comment? Hi guys. Can't wait for more QE. So I'm going to mute that. Yeah, Trichet used to say, yes, inflation would hover at 2%. We're like, Hoover? That sucks. That's how we used to say, 1, 2, 3 feet in the water. You mean you're French? Of course I'm French. Can't you hear my outrageous accent, you silly son of a goat? You ever watch Monty Python? You silly person, you son of a goat, you. Yeah, I actually, Crusoe was in one of those. Oh, yeah. Oh, I was thinking Jacques Cousteau, not Inspector Clouseau. Life of Brian. No, I was doing Quest for the Holy Grail. We're only a few minutes away. It's going to be so exciting. So again, I'm looking for an increase in the amount of quantitative easing per month. That would be very nice. You know what? I'm going to shut down all my other trading platforms. There's just some resource hog going on. If I've updated Adobe Air, how do I fix the stupid Adobe Air issues? Stupid Adobe. No, I don't care about the extension stuff. No, well, there was an extension. That's different. I don't want more mediocrity. So like I was saying before, Joseph, QE1 in the United States worked because it was radical. QE2 did nothing. It didn't work. It was a complete failure. QE3, Operation Twist, didn't do much at all. So it was QE3, a bazooka that worked. So we need Draghi to come in and say, you know what, way more money every month. We're going to take this to the next level. We're going to roll up our sleeves, right? We're getting serious now. That's what we want to hear. That, you know, a decline in the U.S. stock market, a crash in China, you know, some serious shocks going on. We need to get serious about saving Europe, because if we save Europe, we'll save the rest of the world. That's what he needs to say. Europe's the leader on this one. America can't keep the whole entire world afloat. The world needs Europe to recover. So, you know, and honestly, if I was Draghi, I would call China, I would call Japan, I would make some calls around to other central bankers, and I'd say, look, our fates are intertwined here. Your economies suck because they got money in our banks, which suck, so on and so forth, right? We're all intertwined. It's all our risk. We need to get together on this one. We need a coordinated intervention. We need a coordinated something. Right? This idea, can you imagine, like something that's going on in my mind when it comes to like my studies and stuff? Isn't it interesting that these central banks get together and they talk about their own economy, like this is only a European problem? Like the Fed gets together and they're not worried about the dollar, they're not worried about other economies, but I'm like, but it's all globally intertwined, right? Yeah, another Adobe error problem.
Of the Governing Council, which was also attended by the Commission Vice President, Mr. Dombrovskis. Based on our regular economic and monetary analysis, and after the recalibration of our monetary policy measures last month, we decided to keep the key ECB interest rates unchanged, and we expect them to remain at present or lower levels for an extended period of time. Regarding our non-standard monetary policy measures, the asset purchases are proceeding smoothly and continue to have a favorable impact on the cost and availability of credit for firms and households.
This is my Adobe error problem again,
Taking
so
stock
I'm
of
fixing
the
it, don't worry.
evidence available at the beginning of 2016, it is clear that the monetary policy measures that we have adopted since mid-2014 are working. As a result, developments in the real economy, credit provision, and financing conditions have improved and have strengthened the euro area's resilience to recent global economic shocks. The decisions taken in early December to extend our monthly net asset purchases of 60 billion euros to at least the end of March 2017, and to reinvest the principal payments of maturing securities for as long as necessary, were fully appropriate. They will result in a significant addition of liquidity to the banking system.
That sucks, huh?
And will strengthen our forward guidance on interest rates.
Boo.
Yet, as we start the new year, downside risks have increased again amid heightened uncertainty about emerging market economies' growth prospects, volatility in financial and commodity markets, and geopolitical risks. In this environment, euro area inflation dynamics also continue to be weaker than expected. It will therefore be necessary to review and possibly reconsider our monetary policy stance at our next meeting in early March, when the new
We're gonna think about it.
Become available.
We're thinking about it.
Will also cover
Man, the
year
Europeans are slow.
2018.
We have put
In
it
the
on
meantime-
the agenda.
Work will be carried out to ensure that all the technical conditions are in place to make the full range of policy options available for implementation if needed. Let me now explain our assessment in greater detail, starting with the economic analysis. Euro area real GDP growth was confirmed at 0.3% quarter-on-quarter in the third quarter of 2015, supported mainly by private consumption, while being dampened by negative contribution from net exports. The most recent survey indicators, available up to December, point to ongoing real GDP growth momentum in the fourth quarter of last year. Looking ahead, we expect the economic recovery to proceed. Domestic demand should be further supported by our monetary policy measures and their favorable impact on financial conditions, as well as by the earlier progress made with fiscal consolidation and structural reforms. Moreover, the renewed fall in oil prices should provide additional support for households' real disposable income and corporate profitability, and therefore for private consumption and investment. In addition, the fiscal stance in the euro area is becoming slightly expansionary, reflecting in particular measures in support of refugees. However, the economic recovery in the euro area continues to be dampened by subdued growth prospects in emerging markets, volatile financial markets, the necessary balance sheet adjustments in a number of sectors, and the sluggish pace of implementation of structural reforms. The risks to the euro area growth outlook remain on the downside and relate in particular to the heightened uncertainties regarding developments in the global economy, as well as to broader geopolitical risks.
So I guess the market's taking it like
These risks have the potential to weigh on global
the
growth
ECB is going to
and
think
foreign
about
demand for
increasing
euro area
quantitative
exports
easing next
and on
month.
confidence more widely.
So that's good enough for the market, apparently.
Euro area annual HICP inflation was 0.2% in December 2015.
Even the pound is
compared
stronger
with
than the euro.
0.1% in November. The December outcome was lower than expected, mainly reflecting the renewed sharp decline in oil prices, as well as lower food price and services price inflation.
Look, I can't believe
On
all these
the
other
basis of
currencies are
current
stronger
oil
than the
future
euro, huh?
prices,
It's amazing.
which are well below the level observed a few weeks ago, the expected path of annual HICP inflation in 2016
Look at the huge pivot cluster
is now
euro CAD. Be careful there.
significantly
Holy
lower
smokes, eh?
compared with the outlook in early December. Inflation rates are currently expected to remain at very low or negative levels in the coming months and to pick up only later in 2016. Thereafter, supported by our monetary policy measures and the expected economic recovery, inflation rates should continue to recover. But risks of second-round effects should be monitored closely. A more comprehensive picture of the
Okay, nice little move, about 100 pips now. You got to know where to hold 'em, know where to fold 'em. All right, pick your lines, ladies and germs. Pick your lines. Those are the fib levels. Look for psych levels. We're at 108 now. Where's 108.50? It's going to be in there somewhere, right? Let me change the template. Know when to walk away, know when to run. Right in there, there's a beautiful one at 108.50. Let's add a little more time in here, look for some role reversal stuff. Yeah, 108.50 is going to be a nice one. I'm going to take one there, faux show. What else is going on in here? That's interesting. That's kind of where we are now. Well, do you take one at 108 and just see how it goes? Just a little skippy scalp.
Annual growth rate of loans to households increased to 1.4% in November, compared with 1.2% in October.
108.20? Why do you have 20 from the other one?
The lending survey for the euro area for the fourth quarter of 2015 points to further improvements in demand for bank loans, supported by the low level of interest rates, financing needs
So
for
like this, here's the
investment
basics,
purposes,
right?
and housing market prospects. Credit standards eased further on loans to enterprises, notably owing to increasing competitive pressures in retail banking.
Okay, there's the basic stuff, right?
And reverted to a net easing on loans to households for house purchases. Overall, the monetary policy measures in place since June 2014 have clearly improved borrowing conditions for both firms and households, as well as credit flows across the
Yes,
euro
Gino,
area.
yes. If you're doing
sum
just
up,
1 minute
A cross-check of
scalps,
the outcome of the
sure.
economic analysis with the signals coming from the monetary analysis.
But you better be risking
confirmed
like 10
the
pips.
effectiveness of the monetary policy measures in place and the need to review and possibly reconsider our monetary policy stance at our next meeting in early March in order to secure a return of inflation rates.
So Gino says a big, huge psych level 108. All right, I'm not so dramatic about it.
Monetary policy is focused
But
on
if you're going to
maintaining
do it,
price
do it.
stability
But it's a scalp. I
over
wouldn't
the
have
medium
much more
term,
than 10 or 15
and
pips
its
on it.
accommodative stance
'Cause the next one's up
supports
at 50.
economic activity. However, in order to reap the full benefits from our monetary
So
policy
you can go into
measures,
scalping mode
other
here, right?
policy areas must contribute
And
decisively.
you do this.
Given continued high
come on,
structural
mouse.
unemployment and low potential output growth
All
in
right.
the euro area, the ongoing cyclical recovery should be supported by effective structural policies. In particular, actions to improve the business environment, including the provision of an adequate public
it not,
infrastructure,
Greg?
are vital to increase productive investment, boost job creation, and
So what do you
raise
wanna do?
productivity. The swift
What do you
and
wanna
effective
do?
implementation of structural reforms in an environment of accommodative
10
monetary
pip
policy
stop.
will not only lead to
20
higher
pip limit?
sustainable economic growth in the euro area,
Is that what you
but
want?
will also raise expectations of permanently higher incomes and accelerate the beneficial effects of reforms, thereby making the euro area more resilient to global shocks. Fiscal policies should support the economic recovery while remaining in compliance with the fiscal rules of the European Union. Full and
Well,
consistent
then why didn't you sell it at
implementation
the
of the
top? Why
Stability
would you
and
sell
Growth
it
Pact
now?
is crucial to maintain
See, that's the part I
confidence
don't
in the
get,
fiscal
Gino.
framework. At the same time, all countries should strive for a more growth-friendly composition of fiscal policies. And we are now at your disposal for questions.
Jones.
So if you're going to mess around with things, it's already at the higher level, right?
Claire Jones, Financial Times. You said in your opening statement that you could possibly reconsider the monetary policy stance as soon as March.
Country is she from? It's like the middle of winter in
what
Europe,
measures do you
and her
still
blouse
have
is like wide
left
open for
and
the whole world to see.
what you think they can do if these downside risks
That guy just
do
took a look. Do you see that?
materialise? And for my second question, would it be possible for you and
Yeah,
perhaps
that guy
Mr.
just leaned
Constanzi
over.
as well to
Oh,
clarify
wow, his shirt's
his
open.
position on Novo
Bad
Banco?
journalist.
Now, we've
Bad,
heard
bad
that,
journalist.
The ECB wasn't involved in the decision at all. Would
He's
it
like,
be possible
"Don't
for you
look,
to
don't
confirm
look.
that? And
Don't
post
look."
January 1st, now we have a new bail-in regime in place. Would you expect to be involved in decisions?
Look, he's
such as
looking
those
out of his
taken by
right eye
Bank
with
of
his peripheral
Portugal
vision.
in future?
Thank you. I will ask Mr. Constanzi to answer the second question. Keep in mind, however, that we are not the resolution authority in this. I think that's an important point to keep in mind.
No, Gino, you said it was a
As far
long-term
as your
investment,
first
so why didn't
question
you
is
get in it
concerned,
like yesterday or the day before or the day
Well,
before
let
that?
me just recall my speech in New York, which was
You're
actually,
saying 108's the psych level?
quoted,
No, 110's the psych level.
during
Who
our
cares about
discussion
108?
today, saying that first of all we have the power, the willingness,
All right, we're back
the
below, yo.
determination to act. There are no limits to how far we are willing
So
to
should we
deploy
throw down
our
a scalp for
instruments
Gino?
within our mandate to achieve our objective of a rate of inflation which is below but close to 2%. So this shouldn't be any doubt.
Sure, Hans,
about
you can
that.
do some binaries.
And we have plenty of instruments, as you know. And we
It's a good way to scalp.
didn't want to discuss today the specifics of the instruments, but rather to determine and assess the stance that we may have to take in March. And here I'll read again these quite important words. It will therefore be necessary to review and possibly reconsider our monetary policy stance at our next meeting in early March, when the new projections will become available.
So, see?
Yes.
They're going to talk about it. Oh, here comes
We have already
Vitter.
communicated that the ECB had no interference on the decisions regarding Novo Banco, regarding in particular what you asked about bail-in application. And from now on,
You got a little
also,
Skippy
there
scalp here,
is,
little Skippy scalp.
a single
Little
resolution
Skippy scalp.
authority in Europe, and the BRRD and the rules about bail-in will be applied by that resolution authority, and also, if we are talking about smaller banks, by the national.
Yeah, but Gino, those are
resolution
scalps.
authorities that
Again,
exist in
you
all
say you're
countries.
long-term.
So it's not for the ECB/SSM to implement.
Scalping and long-term
the
are
rules
two different
about
things.
bail-in.
Yes, Mr. Ferris?
Tom Furless from the Wall Street Journal. You commented at the meeting last month that the monetary policy stance was adequate. Now, 6 weeks later, you're saying that you want to review it again. What does that say? I mean, is there a sense that that harms the credibility of the ECB, that you have to act again so swiftly? And
Hate guys
my
like
second
that.
question is,
Somebody slap him.
After these multiple stimulus programs, QE and deposit rate and so on, inflation is still almost zero. You think it's going to fall below zero. Is there just a sense that central banks don't have as much control over inflation as they used to? Thanks.
Thank you. Thank you. Well, first, let me say that our monetary policy measures have been, we've undertaken since mid-2014, have been quite effective. If you look at the pass-through of our measures to the lending rates, the borrowing and lending rates, the financing costs, the improvement in all financial conditions, and how these improvements are now being translated into real economy improvements, I think the pass-through has been quite significant, if not spectacular. In December, our measures, the measures we decided in December, were entirely appropriate and have been effective, but they were entirely appropriate based on the circumstances that were prevailing at that time. These circumstances were basically, well, we look a lot at several variables, but certainly we've looked at the, as I think I've said in the last press conference, at the exchange rate in effective terms. We looked at the price of
1 minute cycling
we looked at
down.
growth prospects
I'm
of
going to switch
emerging
it over to
market
the
economies.
5.
Since then, these circumstances have changed. Just think about the price of oil has fallen by 40% since the cutoff date of the last projections. The same thing we can say about the exchange rate in effective terms. And you can observe what's
Anybody
the
watching that
situation
monthly central
of
pivot?
The markets, both financial and commodity markets, and the geopolitical developments since then. So those measures, by the way, in December were quite significant. If one goes back, I mean, our extension of the APP program and the decision to reinvest added
There it
something
is.
like 600,
Down,
21,
down, down
680
in the
billion
burning ring
to
of
the
fire.
liquidity. And it's an amount, people, I'm not sure people have reflected enough. It's an amount, it's about 2/3 of the original size of the program. So now these conditions have worsened. And I think, to respond to your question, the credibility of the ECB would be harmed if we were not ready to review and possibly reconsider our monetary policy stance when we will have full information. As I said before, the Governing Council reiterated that it has the power, the willingness, the determination to act, and the fact that there are no limits to our action within our mandate, of course. Let me also add one other thing that is actually quite maybe relevant in view of the impression. The Governing Council was unanimous in being committed to this line of communication.
Mr. Speziale?
I think there was another question about the power of central banks to control inflation. I think that's a very important question. It's pretty clear that we are adapting our instruments to the changing conditions, and the conditions change because some global factors are at play. And we are doing whatever is necessary to comply with our mandate. And we are not surrendering in front of these global factors' actions. So we will confirm our determination to continue to comply with our mandate, which is to reach a level of inflation that is below but close to 2%, actually even more so in face of adverse developments.
Now, Mr. Speziale.
Alessandro Speciale, Bloomberg News. Mr. President, you have said that there are no limits within your mandate to what you can do. And what I would like to ask you, if you could clarify a bit how this extends the potential scope of your action. Would this mean that you could extend purchases into classes of assets that are completely out of your scope, such as equities or something else? Does it mean that you could lower rates, not just the deposit rate, but also the main rate? And another question is on the refugee issue in Europe. Are you concerned
Another shot at the
by
psych level if you're going to
effects
do
that
it.
you can have for the European common market and for the European recovery from the border closures possible end of the Schengen system? Thank you very much.
Thank you. Thank you. I can only reiterate there are no limits, and in a sense you should see the reference to the technical work. In the meantime, work will be carried out to ensure that all the technical conditions are in place to make the full range of policy options available for implementation if needed just to make sure that if we are to decide about a specific policy instrument, we want to be absolutely confident that there are no technical limits to the size of its deployment. On the refugees, I think I've commented on this in the past. The refugees are an extraordinary development which will be changing, is changing, will be changing the face of our society in Europe as we know today. But it's entirely, well, it's not entirely in our hands, it's also in our hands. The opportunity, the capacity, the ability, the might to transform this development into an opportunity for future growth of Europe. Thank you.
Mr. Ewing?
Jack Ewing, New York Times. You referred in the opening statement to financial turmoil, and also yesterday the biggest bank in Germany reported its biggest loss ever. Are you concerned at all about the banking system or about financial stability in light of what's happening in the world?
Well, the answer, as far as our monetary policy is concerned, when these market developments and this heightened volatility in financial and commodity markets translates where to persist longer than in the short run, it may well become a factor, an unwanted tightening of the financing conditions, and therefore that's one of the reasons why, as I read before, we will review and possibly reconsider our monetary policy.
It's more than 10 pips off the psych.
We are monitoring, constantly monitoring markets and generally the financial sector.
All right, everyone vote.
Banking
Should I
sector.
sell this?
Trying to see
Euro dollar?
whether our monetary policies, I should say not only the ECB monetary policy,
Yeah.
but all the major
You
central
tell me.
banks' monetary policies could become a source of
No,
financial
no,
instability.
no. Late.
And
Don't
so
sell.
far,
No, do nothing.
we have not
No.
seen
All right.
signs
Everybody says no.
of potential financial instability of the like we've seen in the pre-crisis times. Obviously, our mandate is a
So everyone
mandate
says no.
to reach price stability. And it's not exactly a mandate to protect banks' profitability, or for this matter, insurance companies' profitability. But of course, we are aware of the consequences of this, and the best answer to these concerns is to make sure that the overall economy returns to growth.
Leon's mom says
sustainable
no.
growth,
Then I
with
should do
price
it.
stability,
I'm going to do it.
and that's the best
For
answer
Leon's
for
mom.
the stability of the financial and the banking sector as well.
And see what happens. I'm not saying it's good. I'm only doing it because everyone else says no.
Reuters?
Oh, wait, hang on. I didn't know. That shouldn't be so tight. Hang on. Let's do it like that for fun. Huh? It's just eye candy,
Mr.
guys.
Draghi, one of the constraints.
Everybody
on your
says no,
purchases
so let's
is of a political
see
nature
what
rather than
happens.
technical, and
I
that
know
is
it's
the
probably the
capital
worst
key.
place in the world.
Now, could that constraint also be relaxed?
just boring.
Or would
Let's
that
get-
generate a political problem?
Let's just-
My second question relates
let's
to,
just
to
laugh.
banks once again. We've seen turmoil in financial markets. Have you spotted any sign, or at least the potential for any stress, when it comes
Listen
to
to this guy
depositors
talk. Where
and,
is he?
Investors' confidence in the banking sector? Thank you.
Well, the
Thank
first
you.
question is
I talk
really,
like this all the time.
We never addressed that. We've designed our program according to certain parameters.
No, go
so
clean
far,
your
our
room.
program is proceeding smoothly. If there were constraints of any kind, as I said, we'll have technical work making sure
Oh,
that
of
we
course,
can
Gino.
use all the instruments up to their full availability. On the second point, the best answer to these recent developments in financial
Yeah,
markets is
it's
to
just
make
funny, isn't it?
sure
Well, we
that
got to look at something.
the
and
banking
I'm just
sector
bored of
is
not looking at
resilient.
something.
And,
So if we lose money
I'm
here, then we
confident,
know it's because it
and
was
actually it's more
a
than
dumb
confident, it's a
trade.
factual
Well,
statement, that
good.
all the
At least we
actions
can
that have
watch a
been
dumb
undertaken,
trade,
both
right?
in Europe, but as well elsewhere in the world, have actually produced a much stronger banking sector than it was before the crisis. In a sense, but one should be very cautious here about not being too
Man, he's better you than me.
self-complimentary.
It's
But
like
certainly
$200,
the-
right? $250.
Gyrations that we are observing in financial and commodity markets on other occasions, in other times, would have severely tested the resilience of the banking and the financial sectors at that time. And so far, we've seen actually that they stand pretty resilient.
Mr. Lacour?
Yes, Jean-Philippe Blacour, Les Echos.
Now, what if it
The
was?
President has two questions.
What if it was back at
risks,
108?
two
Would I
risks,
should I
but
take
have
that
two
right at the
questions.
psych level?
There are a lot of
I mean, obviously, you couldn't make a worse
First,
trade than
China.
this, right?
There is a kind of lack of visibility at this time how the Chinese government
So,
will deal
is there a
with
better
the
one?
soft landing of the economy, which could turn
Psych
to
level
a hard
108?
landing. There is a risk. So that makes a lot of people nervous. I wanted to hear from you how this topic was discussed today.
Yeah, Sean
Because
says the more
I read in
the more Draghi
the minutes
speaks, the
from
more
former,
the
meeting,
worse things
I
get.
guess, if I understand, China's risk was more understated.
DeBeesta says
Second
sell at
question,
monthly pivot
refers
point,
to
yeah,
refugee
monthly central.
Europe
Yeah, that's
from
way
a
up at
German
16.
perspective. Here,
Sure.
Chancellor Merkel is taking a big risk with her policy, and that leads to a lot of criticism.
James says 382 to 618.
Inside her party, which could, if the
Sell the retracement to
situation
108
worsens,
is what
some
Gino
people,
says.
Guess that she
Timmy
could
says
maybe
buy
be,
at 107.
uh,
Ooh,
chancellor.
I'm not a counter
So
trend
my
trader.
question is, how do you assess, or was it a discussion?
I don't like doing that.
This domestic policy crisis in Germany.
Yeah, the yen
regarding
trades
the
are-
question of refugee.
Yeah.
On the first question,
But, you know, it's
first
an
of all,
ECB press
let me
conference,
make
so I thought
clear
we should
that
watch the E ECB.
reference to China in the accounts of our meetings last time ought to be read for what it is. Namely, the accounts reflect the opinions of some participants to the discussion. Now, on coming to the substance of your question, there have been at least three main developments in the recent weeks in China. The first was a PMI which was weaker than expected.
Yeah, no, I
second
know,
was the overall
Stefan.
situation in the Forex market.
I did it because you couldn't have
And the
made a
third
worse
was the situation
trade.
in the stock market.
I asked everyone, they said no.
All this
So, doesn't matter,
generated
then at least we can see how
sizable
smart we
capital
were.
outflows. So we are carefully monitoring these developments. And so far, all the economic indicators
Yeah,
show
don't get me
that
wrong,
there
I'm
is
not
a
saying that's how I
gradual
would trade.
deceleration. By and large, in line with our
It certainly got your focus.
The outlook, however, for the euro area following these developments has been, as I was saying before, revised downward. And the effect of these developments on the commodity markets are quite visible. There has been a renewed decline since mid-October, with both oil prices and commodity prices at having reached lows by especially around the end of 2015.
Psych level respected again.
So, as far as oil prices are concerned, we have both supply and demand factors. Clearly, what's happening in China is contributing to the demand side of this development. Let me, however, give you a line which has surfaced in the discussion. What are we going to expect? And it was recalled that the Chinese authorities have a reputation for acting responsibly. And
Well, it's not falling. That's usually a precursor to rising, right? You can see people have stopped selling it at that psych level.
Now, on the refugees, I mean, the nature of your question is certainly important, but there is very little I can do about how the refugees issue is being viewed in one specific country. I can only give general impressions of how we view the whole phenomenon.
So that double bottom held, right?
Which, as
You
I
see
said,
that?
is
That's a
big,
key
important,
point.
Structural.
That's a very key point. I think it's going to
sociopolitical
pop.
Change, but also
You watch, it's going to jump up, probably snag or stop. It's going to jump up about 20 pips.
Well, that's
Because I don't see selling, right? You see, we're on the psych level. I should see a giant red candle by now, right?
Markus Sydra.
Right? It should just go red, red, red,
Mr.
red.
President, I'd like to pose a question on the oil price.
Oh, well, maybe it is.
Wouldn't it be just be better
Maybe the
to
market's
more or
just
less
slower than I
ignore
am.
the impact of the low
Come on, Bubba, if
price
you're going to
on
turn red,
inflation?
man, you got to do it here. If
I mean,
not,
history
it's going to
shows
turn
that oil
green like a
prices go
big
up, go
green
down,
candle.
and they will go up
Because there's
again,
no sellers,
for
right?
Sure, I guess. So why not just be patient and wait?
How
for
can
the
it
oil
fall
price
if
to
there's no
rise
sellers?
And then get the higher inflation rate as a free lunch, maybe? Well, it would be a perfect world like this, but why is it so important to look on the oil price?
Let me refer to what we are looking at when we have this dramatic movement in oil prices, but also other commodity prices. We look at basically three factors. The first is the persistence of these changes. It's quite clear that if it were to be a short-term effect, as you seem to hint at, we would look through. But that's not been our experience.
3 candles in a row without a higher high, that is going to pull the oscillator up. And if we print a red candle here,
we look
in
at
particular
the
lower than
materiality,
this wick
namely the
and lower
size.
than this wick, then it's going to
And
cross the
when you look
oscillator
at that,
down.
As I said before, since the cutoff of the last projections in December, oil prices fell by 40%. And we look, and that's also very important for us, we look at second round effects.
Which means
Namely, whether
if
low
this
oil
prints a
prices
lower
and
low
low
here,
commodity
just
prices
even though it's a 1 minute chart,
feed
if it prints
into
red
other
lower
prices
than these wicks,
that
then it would be
then
a time to
that
jam
could
your stop.
generate
Because that would be a new
exactly
peak,
what
right?
we want to avoid, namely a spiraling downward phenomenon. So far,
Yeah,
we
and
don't
it's
have
turning
that,
green.
but we have seen. We got to be very vigilant about that. And and even when you look at the recent developments in the non-energy inflation, core, so-called core inflation, we don't have many reasons to be optimistic about that.
What do you think
When we
about
look at
the
wage
monthly
development,
central?
we don't have
Should I
many
put one
reasons
there
to
for
be
you?
optimistic about that. So
Where's the next one we should
We
watch?
have to take seriously the fact that low oil prices, low commodity prices
Yeah, exactly,
for
right,
a
Jimmy?
long period of time may actually have second-round effects.
Jimmy says
that
lesson
we
for selling
definitely
at support.
want to
Absolutely.
take action against.
How many times in the last year have I recommended selling at support?
Thank you, Mario Blaszczak, World Business Press Online.
Zero, yeah.
President Draghi, you mentioned...
No!
as
James, you're missing the
illustration,
whole
I guess,
point.
the
I
three
thought I was
major,
pretty clear.
Factors
I
that
did it because
take into
everyone said
account,
no.
Namely the exchange rate development, the oil prices, and the emerging markets effect or
It's not
slowdown
a
on
trade,
emerging markets.
just something to
I was
watch.
just wondering if you can give us the sense of the combination of all three. At the moment,
area that I've
given the
recommended
slowdown or
is up here.
deflating China effect on both the financial market volatility and oil prices.
That's the only thing I've recommended
That's
so
my
far
first
today.
question. And the second question relates to global sell-off on equity markets that creates a lot of free liquidity, and as an option of safe
Yeah, I've
haven,
never
maybe
once
the
in my
assets
life
there are,
recommended a short like that.
that are purchased by the European Central Bank might be the target for the free money. So aren't you worried that this development, should it continue, would kind of jeopardize the targets of ECB? Thank you.
Thank you.
So 16 is the
Well,
next one, guys.
I mentioned these three. In fact, we look at many other factors. And by the way, let me state once again that the exchange rate is not a policy target, but it's pretty clear that our actions have an effect on the exchange rate. And I was pretty clear also about specifying that the exchange rate I'm referring to is an effective exchange rate. So it reflects the actions taken by a variety of other countries. So that the oil prices and the growth process in emerging market economies were three of several factors that we look at and that we had to look at.
Gino says scary
as
retracement if it goes
changing
up
the
there.
outlook
Why?
for
It's
the
only
euro
50
economy
pips.
and the outlook and the medium-term outlook for inflation. So that's what we are looking at, what we are monitoring. And that's why I said we will review and possibly reconsider our monetary policy stance. Your second question is very difficult to answer to. It's quite clear that we see major movements in the marketplace, and what could be the sources of these movements, the causes of these movements. It's very difficult to assess whether they're going to be sort of transient, short-term movements, or whether they're going to be persisting, whether the markets will sort of adjust to a different level or not. These are all questions that probably market analysts are better positioned to answer.
Yeah, James, what I'm trying to, what I showed was what a lot of amateur traders do, and why we don't like it. I find it just even painful to watch, right?
Question of the financial stability.
So how is it that people make a whole career of doing it? It seems, you know, someone else asked earlier today, they're like, here, let me shut up the ECB here. Someone said, oh, well, you know, sometimes it doesn't retrace. My comment was, yeah, well, then you don't trade it. Right? I think that's the fun part. You trade your plan. If your plan doesn't, you know, get executed, then you don't trade. I mean, it's just that easy. So we've gone over an hour and a half. Wait, it should have been a lot more than an hour and a half, right? What time is it? Stock market's going to open. Let's wrap up here. Now let's keep going. In 15 minutes, we have the stock market open. Do you want to hear that? Oh, look, we missed the monthly pivot. Did anyone take the monthly pivot? I missed it. I was doing things and I was messing with the ECB page and a bunch of things. Did anyone do it? DeBista took it. DeBista said he'd take it. Gotta watch the fib wars on this one. So yeah, about 15 minutes until, well, it's 17 minutes until the U.S. stock market opens. So I'll cover that. And we'll listen to the trading pit of the S&P 500. We'll actually hear the guys screaming and yelling on the trading floor. Yeah, DeBista, you did call it out. We'll see if it sticks, Bubba. Hey, let me ask a question while everyone's here. If I flew out to Singapore for a couple of days, would anyone pay money to get together and trade for a day or two? I kind of want to get on a plane and go somewhere warm. But I don't like vacations. My wife and I were talking about it just yesterday. And I'm like, oh, man, I need a vacation. And she says, wow, you've really changed over the years. You would never want to go on a vacation. I'm like, oh, yeah, well, I don't mean vacation. I want to go work somewhere. So if anyone wants to get together at a hotel room and trade for a whole entire day, like do an 8-hour trading session together, if you'd want to meet up in Singapore and maybe throw in $500 into a pile to cover travel expenses, that'd be interesting, huh? Anise, I've done that in Dubai a couple of times. I'm actually due for a trip out to Dubai. I haven't done it in a long time. Yeah, Hong Kong. I'm interested in anywhere warm. If we could get 5 guys together, I'll fly out for 2 days and fly home. Last November? What do you mean last November? Yeah, in the 20s now, yeah. That sounds good. 37, yeah, well, that's a little warm. Well, let me know if you guys want to do that. I'm interested in anywhere. I gotta get out. Just 2 days, man. Mazurs in Singapore? Yeah, you know what? The reason I bring it up, I know people in Singapore, and so I was looking at Raffles. The prices at the Raffles Hotel are like 60% cheaper than regular. 60%. And I looked at Dubai as well. I like the Ritz-Carlton in the Marina because the Marina is a fun district. It's a good place to hang out. Also, my favorite cigar bar in Dubai is across the street from the Ritz-Carlton. So I don't know if I like the cigar bar because of the Ritz-Carlton or do I like the Ritz-Carlton because of the cigar bar. I'm not really sure. It's all the same. But the same thing, 60 and 70 and even 80% cheaper than just like 3 years ago. 70% cheaper than 3 years ago. 70%. Now, part of that might be the U.S. dollar strength. Part of that's the economy in Dubai is hurting right now, especially since the royal family just stopped paying their bills. So it's interesting. We can go to some of these places, and it's a lot more affordable than it used to be. Zurich, wrong time of the year for Zurich, and I like Zurich, but not warm, man. Otherwise I'd be in Davos, right? Yeah. I can't afford to get hurt, Mark. That'd be the worst thing. Go to Zurich, break your leg, get jacked up on painkillers and blow up my trading account. That sounds terrible. I actually know someone that, I don't know, for some reason he got on some medication of some sort, and he blew up his trading account. He just lost his mind. It affected his brain, and he was trading, and just 3 weeks later, the account was gone, and it was the drugs he was on. Yeah, not that he was drunk, it's just you don't think right. It changes the chemistry in your brain, and it rewires your brain, and all of a sudden, he couldn't trade. Yeah, I've met a lot of people and seen a lot of things. But so whatever. Let me know, guys. Kathmandu would be fun. Tbilisi, I'd go to Kathmandu just to hang out with you, but let's get like 3 or 4 more guys together. See, that's the thing. Even if it's just like a group of like 6 people, that's $3,000. That'd cover my expenses for a short trip. I'm not looking to make money. I don't like those things. I don't like to lose money either, but what do people charge now? What do experts charge for weekend seminars? You know what I mean? What do people charge these days? I have no idea. What do they charge? $1,000, $2,000? I'll do it at cost. I don't care about money. All right, DBista's making money. Go DBista. Lagos, Lagos. I know for someone from Lagos. I don't know if I'm ready for Lagos. $2,000 for a weekend? Yeah, see, that's stupid, right? I'm just saying the biggest cost is flying, and even flying's cheaper. I used to spend, $10,000 or $12,000 or something like that to fly to Dubai. It's much more affordable now. And then, 5 days at a hotel in Dubai was $5,000. So, a quick trip to Dubai would be, with food and stuff, I don't know, $17,000? It's much more affordable. So that's why I'm like, let's do it now. Hotels are cheap. They probably give us a room for free, not like a conference room. They'd probably give us the conference room for free. They'd be happy to have us there. You know what I mean? Like, why not? Let's do it, right? Mike Covell asks for 100,000. Yeah, I suppose. But you know him, right, Mark? And Mike's not even a turtle. But he's not a turtle, is he? He never was a turtle. So how does he get $100,000 a weekend per person? Yeah. But he's an expert in turtles. I love it. I love it. He's a nice speaker, though. I heard him the other day. He seems like a nice guy. Yeah, well, maybe Mike and I should get together and do a conference together. So, anyways, you guys let me know if you want me to do something. I'll do it at cost. I need to get out of the house. That's it. Let's get together in Singapore and have a Singapore sling. Yeah, visit Daniel. Yeah, there's a couple of people there I'd like to see. All right, DeBeasta's getting nervous now. And slowest thing in the world, huh? Slowest scalp in the world. Now notice I drew this fib wars. Do you understand the fib war concept? When the markets split, they're going to do the same thing but in opposite directions, right? When half the market wants to buy and the other half wants to sell, what the buyers do is they buy, like, let's say 382 to 618 Fibonacci retracement, but the sellers are going to sell a 382 to 618 Fibonacci retracement, and you could really get caught in the middle. And if your entry's poor, the bulls or the bears could possibly kill your trade. DeBeast over in on the YouTube side. We have some people over on YouTube watching live as well. Okay, coming up to the 15-minute 5 EMA. This is a very important convergence. And once again, it's the monthly central pivot point. It gets more and more interesting as the moving averages come down. What I think I might do here, you see how I have two lines of resistance? Right? I have this one here and this one here. These are the orange lines. That's based on price action. These levels were important in the past. You see how I have it marked? And I might sell the middle one and have a stop probably above the whole dang thing. And have like 150 pip stop, 300 pip target below us. So 108.50 down to 105.50 might be my plan. What do you guys think about that? Wayne, will you do a seminar in Syria? You know what? Right before the civil war in Syria, I was telling my wife, like, places on earth I'd love to go to that I think would be unbelievably fascinating, and in an incredible, couple of incredible places to visit. And at the top of my list was Syria. Not a lot of tourists compared to other parts of the world. Unbelievable history. Going back to the beginning of time, I think the first time humans ever gathered in an organized community of like 10,000 people, which means you need water, you need food, you need a market, you need security, you need cleanliness, you need sewage, all these things. You need the basics of infrastructure at that point. And that was like a date farming town in some part of Syria, going back like a bajillion years. And I thought, how fascinating, right? The absolute beginning of, of humanity. Very cool. No, I wouldn't go there now. Right? I'll meet you in Lebanon. Yeah, Sean says Damascus is the world's oldest continuously inhabited city. To think, though, that there was a city, like they're saying it was something like potentially like 3,000 years before the pyramids. Like it was like almost 10,000 years ago, I think it was. I mean, so ridiculously long ago, but it was a real city. Okay, so anyways, like I said, guys, I might throw one down up on a high, which is around 38 or 40, and that gets me this first roll reversal. The second one is more interesting, really, but I know that it's only 20 or 30 pips away, right? And then there's the midpoint psych level, which is in there as well. So let me change my fibs now. You could fib it this way. Ooh. Okay. That's about a 50%. So yeah, right in there, and then my stop would be here, and my limit would be 300 pips below. And it'd be something I'd sit on for a while. That would be the idea. What do you guys think of that? Oh, did I miss the market open? You guys, why don't you tell me 2 minutes ago?
Might have been 4 evens on the buy there. Screen moving awful fast. 1 half, 2 even. 2 even bid, 2 half bid, 3 even bid, 3 even, 3 half. 3 even, 3 half, 3 half bid, 4 at 3 even. Opening range 1857, 1855. 53 half, 54 even. 4 even, 4 half. Speed's good. 3 even, 3 half, but too much speed. I think you start losing liquidity. 4 even, 4 half. 4 even, 4 half. 4 half, but at 5. At 4 half, it's just like in retail, traffic's too good, but too much traffic is a hindrance. 3 half, 4 even.
Okay, so I have a 150, 300 OCO set up.
Retail traffic is good, but too much traffic is a hindrance. Too much speed in this game is.
So we actually touched the line. I was looking at it on the 4-hour, missed it.
There's a balance. 2 half, but at 3.
Let's see if I can catch it a little bit higher.
10, this is DT trying to lift.
I might have missed it, huh?
Sold 5.
Remember, this is what I had earlier.
50 cars.
Holy Batman.
25s. 2 half. Actually split the last 25 up. 3 even bid, 3 even, 3 half. 3 even, 3 half. At 2 even, 1 half. At 1 half. 1 half, but at 2. 1 half, 2 even. 2 even, 2 half. At 2 even. At 1 half. I don't. What's that? At 1 even. Oh, half 1 even. Boston buys 20. 1 even, 1 half.
So yeah, guys, if you want to get 5 or 6 guys together, we'll get into a room. We'll do London for 3 hours. Go have lunch. Come back to New York for 3 hours.
Half 1 even. Buys 10, 10 and 5. As Boston buys 25.
Be a nice trading day.
Half 1 even, 1 even, 1 half.
Let me know if you got a crew.
Oh, half 1 even.
I'll fly in. We'll do it. One day to see the area. I'll get back on a plane, fly home.
Oh, half 1 even. Half bid Boston.
I'll go almost anywhere warm.
1 half 2 even.
See, 6 guys is good because you got 3 guys on one side of the table, 3 on the other.
I hate that. 2 half
and I walk.
3,
I never
buys
sit
10
down.
More, Boston on the buy. I'm good, thank you. 3 half bid. Market's scooting away. Buys another 10. God hell here. He's trying to get them done. 4 even, bid 4 even, 4 half. Buys another 10, 4 half, bid at 5. 5 even bid, 5 half bid. Market taking off upside on him. 6 even, 6 half bid. 6 even, 6 half.
Looks like a rally on the rally on the open.
7 even bid, 7 half bid at 8 even. Buy him 8 even bid, 8 even, 8 half. 8 even, 7 half bid at 8. At 7 half, he's bid 7 half. 8 even bid, 8 even, 8 half. 58 even, 58 half. This is Bosch, the next FA on the buy. Bid 8 even is now 8 half bid at 9. 9 even bid. Market flying on him, 8 half, 9 even. 8 half on 10. 8 half on 10. Sold. Got him. 8 even, 8 half. 8 half, 9 even, 9 even, 9 half, 9 even, 9 half. Even bid on 10. Buys 10. At 9 even, 8 half, 9 even. 8 half, 9 even. Locals spinning to get out of these things. 8 half, 9 even, 9 even, 9 half. Some to the good, some to the bad. 9 even, 9 half. At 9 even, 8 half, 9 even. 8 half, 9 even. Opening range once again, 1857, 1855. Those are all evens. 58 half. 58 half, 59 even. 8 half bid at 9. At 8 even. 7 half, 8 even. 8 even bid, 8 even, 8 half. At 8 even. 7 even, 7 half. 57 even bid at a half. 7 even, 7 half. 7 half bid at 8. 7 half, 8 even. At 7 even, at 6 half. 6 even, 6 half. 56 even bid at a half. 6 even, 6 half. 6 half, 7 even. 6 half, 7 even, 7 even, 7 half. 7 half, 80. 57 half, 58 even. The high thus far, 1859 even. 8 half, 9 even. 58 half, 59 even. 8 half, 9 even. At 8 half. 58 even, 58 half. 8 even, 8 half. 8 even, 8 half. A good crowd today. A little healthier than yesterday. 9 even bid.
So if you don't know what you're listening to, that is the guys that are talking.
78, 79%. 8 even bid. 8 even, 8 half.
8 even, 8 half. They're reading the bid-ask spread from the hand signals of the traders in the pit in Chicago at the Chicago Board of Trade. They're in the S&P 500 pit, reading the hand signals of the floor traders.
9 even, 9 half. 59 even, 59 half. 9 half bid. At 0 even. At 60 even. 59 half bid at 0. 0 even bid, 0 even, 0 half. 0 even, 0 half. At 0 even. 59 even. 59 half bid at 0 even. 9 half bid at 0. 0 even bid, 0 even, 0 half. 0 half. 0 even, 0 half. 60 even, 60 half. At 60 even. 59 half bid at 0. 9 half bid at 0. 0 even bid, 0 even, 0 half. 0 half, 1 even. 1 even. At 1 even, 0 half, 1 even. 0 half, 1 even. At 0 half. 0 half, 1 even. At 0 half. 0 even, 0 half. 0 half, 1 even. 1 even, 1 half. 1 even, 1 half. At 1 even, 0 half, 1 even. 0 half, 1 even. 0 half, 1 even. At 0 even, 0 even, 0 half. 60 even, 60 half. 0 even, 0 half. At 0 even, 59 half bid at 0. 9 half bid at 0 even, 0 even, 0 half. At 0 even, 59 half bid at 0. 9 even, 9 half. 59 even, 59 half bid at 60 even, 9 half bid at 0. 0 even, 0 half. At 0, 0 even, 0 half. 60 even, 60 half bid. RJO buys 10 and 10. Looks like you got 20 cars there. 0 half. At 9 half, at 9 even, and 8 even, 8 even, 8 half. He paid 1 even on those, 61 even. 8 half, 9 even, 9 even, 9 half. Looks like 30 cards were bought there again, 9 even, 9 half. At 8 even, at 7 even, 6 half bid, at 6 half, 6 half, 7 even. 6 even, 6 half, at 6 even, 5
Yeah,
half,
technically on the hourly, it's still a very mixed bag.
4 half bid 4 half. 4 half bid at 5. 4 half, 5 even, 5 even, 5 half. At 5 even. Somebody wiping the screen out at 5 even at 4 half. 4 even at 4 even. 4 even, 4 half. 3 half bid at 4 at 3 half. 3 half bid at 4. 53 half, 54 even. 4 even at 4 even. 4 even at 4 even.
Everything's
3
still
half, 4 even
bearish.
at 3 half. 3 half, 4 even.
Oh, you know what I wanted to show you earlier? The charts froze out.
3 half bid at 4.
I didn't have it here, so let me go back to an old chart.
3 half bid at 4 even.
And
4 even.
we talked about
3 half bid at 3 even.
this
2 half bid at 3.
like three months ago, maybe 4 months ago. We identified this key area. Where's my S&P? I don't have it here anymore. Boy, too bad. I thought I had it on one of these charts. I thought it was this Aussie dollar. Let me see if that is still there. No. Okay, let me clear this out here. Let's just do scan. All right. Go daily here. And then back out. I think I need to back out a little more. Yeah, okay. So we had identified this area in the past. Let me get really into this here. This area right here. I had 2 or 3 other areas that I had talked about when we were up at the top. We knew we were ready for a retracement. And I think another area that I thought was interesting was like this area. Okay. But I said, okay, if we broke that, there's no reason to panic. The next level's here, but we have to buy it there. And I went into the big speeches about, you know, more people make money on the way up than down, and that there's a prevailing wind pushing stocks up on the long run. You guys remember these conversations? I'm telling you, this was 3 or 4 months ago, whenever it was, October, you know, we were up here making lower low, lower high scenarios. Okay? So look where we are now. We actually touched that bottom yesterday. And what I said back in October is if we touch this, it has to go up. And if it doesn't go up, it's the end of the world. And I'm not a big, you know, end of the world kind of guy, but where's the next level of support? Right? What do we got to do? Fib that move? Really? You know what I mean? It's a long ways down. Best guess would be 1488. So let's just say 1500. Oh! I mean, that's unthinkable, right? Oy vey. 1730. Now you're playing the 382. In my experience, that's not enough. When you have that type of move, that's not enough. What was the number for the huge crash of 2007, 2008, 2009 when the stock market fell? What was the fib number that held? I'll give you a hint. It wasn't 382. $50, yeah. So what, my humble opinion, what we need to be eyeballing is 50% to 618, and I say 618 not just because it's 618, because of this dipsy-do over here. You know, and that's, I mean, it's ridiculous to even think it, right? So what I was saying back in October is I don't think that's going to happen. Okay? I still don't think it's going to happen. But it might. So yesterday's bounce, when, remember I was showing you that all these stock markets, they reversed on reversal pivot. So I say, well, at least it's logical. At least it's intelligent. Okay? But holy smokes, eh? I mean, that's the thin red line, and it's kind of looking like an Obama thin red line. You know, like it might be there, it might not be there. So very curious indeed. I'd like to see a few green days. Now, let me tell you how this sucker's going to reverse if it does reverse. Okay? It's going to go up a little bit, then it's going to come down and almost do it. Okay? And then it's going to go up, and then it's going to come down hard in, what do you think, March and April? And then what? Oops, I guess I got to go that way. So I'm already thinking September. Okay? Very interesting stuff, right? This has to go up, or I don't know. I'm going to take I don't know, take my wife and children and live in a small village somewhere off the grid. Right? Go live on a tropical island somewhere with solar panels and you know, a machine to make clean drinking water and just get away from civilization. That's the plan anyways, right? Yeah, don't forget the fishing poles, yeah. And it has to be an island that, you know, is at more than 5 feet above the sea level. So I don't know. I don't think it's going to fall. But that is the line to watch. And after that, there's not many other lines. Okay? So it's been real. You know, we've been hanging out for since 7 o'clock in the morning. It's almost 10 o'clock in the morning. So thank you for your loyalty and all that kind of stuff. I really appreciate it. Okay? Peace on earth. May the pips be with you. May your profits be above average. And it's Thursday. Don't forget, in 45 minutes, you're going to have oil inventories. That's going to be a market mover. And tomorrow, I will be at fxstreet.com. So I hope to see you there. So once again, you know, I can't say it too much. Peace on earth. May the pips be with you. May your profits be above average. Cheers.